Bosh, how's it going, everybody? My name's TradeX, this is my trading den, and today we're covering unmitigated ranges. Fundamentally, I think this is going to change your trading for good. If you haven't already watched the first episode in this series, which is parent and subordinate price swings, and then the second episode, which was premium and discount, guys, make sure you watch those videos first. Pause this one, go back and watch those and come back. I'll put comment cards top right hand corner. But if you have watched those, then this one is going to start piecing it all together for you so you can start taking better entries and understanding market structure, because although we're ICT traders, that's the lipstick, we need to have the market structure which sits underneath. So today we're going to talk about unmitigated ranges and breaks of structure. Okay, let's jump straight into it. So just for an example, and we'll go into some live charts after this. We're going to look at this, which is essentially a breakdown of a 1 minute chart. And we have both bullish and bearish examples, and these would be unmitigated ranges in both examples. Okay, so what we're looking for is primarily we need to be aware of the low that prices ran into. So this needs to be a high time frame institutional reference point, whether that's a fair value of an hourly dealing range, whether that's being inside of a discount, whether that's being inside of a MIT block, breaker block, whatever it is. On the high time frame, we have to have an area where we are expecting price to respect, okay, and move in the opposing directions. Now, what we have here is a classic high and a low on a 1 minute chart. What we're looking for is price to break this structure. Now, what we're then looking for is price to come back to 50% of the range which created the break of market structure. Very, very simple, but trust me, it gets more and more deep, and there is layers to this. Now, if you want to go down the rabbit hole, then I teach this inside Red Pill Trading. You're more than welcome to join. I'll put the link in the notes below should you ever wish to join. If you don't, honestly, you don't need to, because everything you have is in this series to make money, right? But what we have is this break of structure. We're looking for price to come back to 50% before expanding higher. On a bearish example, the same principle. So we have this range that was created, this break of structure happens here when this low gets ran, and we're looking for price to return up into 50% before continuing down. This is very, very different to a premium and discount returning to OTE, and we'll break that down in charts soon. Now, what I'll add is that time is fractal. So this is a 1 minute chart. Okay, so you might be saying, well, why is this range not getting retested at this point? Well, price can come back to this range. This is the range which created the break of market structure, which then led to this break, but time is fractal. So on a sub 1 minute chart, we may have a range where a break of market structure took place on a 10 or 15 second chart and mitigated that range before reigned expansion. Now we have a break of this 1 minute, looking for price to come back to 50% of the 1 minute break of market structure before price moves higher. So at this stage, all I want you to understand is that mitigation of ranges, we're looking at price to come back to fair value. So 50% of the range which created the break of market structure. This is where you find your high probability entries. Why? Because this is where institutions are repopulating their longs, and they're also rebalancing price when it was delivered on one side only. So it's only been delivered on the buy, it's coming back to offer it on the sell. Okay, this is a mitigation of a former range after witnessing a break of market structure. So let's jump into live charts and start breaking this down and piecing it all together for you. We're going to be looking at NQ, and we're going to be looking at the 26th and 27th of October for those who want to go and back test this. And we're going to look at this price action first. We were at this order block, okay, this high time frame order block on the hourly, and we were at fair value. What else did we have at that level? We had a mitigation block, this high, this low, this failed high break. This is a mitigation block on the 1 minute. Therefore, we have a reason for why price is going to respect this level, as we can utilize that to get in sync with higher time frame institutional reference points where institutions are placing their orders. Okay, so what do we have here? This is the same principle we were talking about previously. Okay, this range here, when it breaks, we now have a break of structure. So if we go back to our previous slide, this range here is our boss, our break of structure. Okay, when it breaks here, boom. We are now waiting for price to come back to 50%, classically known as point of origin, or returning to a previously unmitigated range. You can see how price expands higher, comes all the way back, doesn't quite hit it here, moves higher, boom, 50%. There's your entry. A lot of traders who trade with me inside Red Pill know that I'm hyper aggressive. I'm not a trader who waits on secondary entries such as 2022. If you want to dive into this deeper, trust me, you can go right down a rabbit hole and literally bottom tick and top tick ranges, and we do. Okay, but what I'm showing you today is how you can start to get in sync with that. Okay, so you can see here, boom, ran into 50% of this range. Okay. So if we get in here, what could we be looking at? Well, we could be looking at previously unmitigated ranges on the highs. So what do we have here on the high? And this is going back to what we discussed in the previous slide, right? So we have this range which was broken. At any point, has price come back and mitigated this range? Has it come back up into 50% of this range at any point? So if I just put on this unmitigated range, at any point did it come back up here and fill it? No, it hadn't. So what we can do is then draw this across our chart, because we would anticipate at some point price to return to a previously unmitigated range to rebalance. So if we're getting in here, so we've gone from previously unmitigated range at a higher time frame institutional reference point, we could scale out all the way to an unmitigated range on the high. Boom. You have bottom ticked and top ticked a range using unmitigated ranges. Okay. You can utilize this in many scenarios. So I highly suggest you go back through your charts and back test it. But what I want to do is bring in something else. Okay. Because this is where we can start getting pretty juicy, and we can jump down onto lower time frames. And as I mentioned, time is fractal. Inside of 1 minute candles, we have subordinate and parent price swings on and below 1 minute. What do I use? 10-second and 15-second. So what I want to do is just look at this piece of price action here, because it breaks down an example. So in here, most people won't see an entry, but this is where I am getting in. I'm getting in right up here. What a lot of traders will do, they'll be waiting for a very, very clear break of market structure. On a 1 minute, they'll be looking for a return to a premium, right? This is the classic ICT teaching, before going short. So a lot of traders would be waiting to go short here, right? This is where a lot of ICT traders will be looking to go short. And look, there's fundamentally nothing wrong with that. But my style of trading is that I am in up here and I'm scaling out here. So I'm already out the majority of my position before most traders are getting into their position. So my risk is far less than those who are getting in on a 2022. And I can show you exactly how to do that now. Okay, let's just bring in a Ninja Trader chart. This is a 10-second chart. And what we have is this low, which puts in this high that breaks. Break of structure. Looking for price to return up into 50%. Bingo, this is how you start triggering in your entries. What do we have here? We have another fractal just below it. Okay, so this low and this high, when it breaks, price comes back up to 50%. Bang, another opportunity to go short. Okay, this range here, this low to this high, when it breaks. This is on a sub 1 minute chart. And yes, I do find Ninja clunky. Did we mitigate it here? Did this high run into 50%? No, it did not. So what did price do? Comes up into 50%. This is also actually balanced price range, and it runs up into 50% of BPR as well, but that's another topic. And you can just follow price. You can follow price like this and keep in sync. So let's have a look at this price action here. Okay, what do we have? We have a low and a high which is broken. Is this range here mitigated? At any point does price come back up to 50% here to mitigate? No, and we are talking about this range here when it leaves 11:30 candle. 11:30 candle is here. Okay, so all of this range is a 1 minute range, right? This is just a 1 minute range, right? 1 minute protected high, new low. What we're looking at, price returning to a premium, price moving from a premium to a discount. So if price is coming back to premium 62%, what could be at 62% on a lower time frame? Well, that price could be reaching to? Well, we have this unmitigated range. Okay, so let's move this across. When does price actually hit unmitigated range? Bang, 1207, right on this candle. Then it mitigates it. So this is how you can utilize mitigated ranges to get in sync. Now, what do we have here? So we had a high which puts in a new low. So this became our protected high. This is how you start piecing it all together, guys. But now you've got a break of structure on the 1 minute. What's your first thing you should do? Look at a parent price swing. Where's the parent price swing? Hello. this high, put in this low. Did this candle create a low which closed below this low? No. So this is still our dealing range on the 5 minute. So price has literally just come back up into a 5 minute, a parent premium before moving lower. So now I've shown you how to get in sync on right at the highs on lower time frames, and also when to expect pullbacks into higher time frame premiums using lower time frame mitigated ranges as potential areas where price might pivot and continue. Let's look at where price might continue to. Well, it could continue to previously unmitigated ranges on the lows. No? Yes. So what do we have here? We have this high and we have this low. What does price come down to a tick? Do not take the tails on the lows when bullish, and you don't take tails on highs when bearish. So price comes down to 50% to a tick before moving higher. Previously unmitigated range, right? Moves back up into a premium of this little fractals unmitigated range before moving lower. Okay, what could we be looking for on the lows for continuation? Hey, guess what? Previously unmitigated range. Okay, so we have this high and this low. When this broke, and we actually had a new day opening gap which broke above it, this left a range that was open. Okay, so this is likely to fill at some point, but regardless, we could dial in our entry to a tick by looking at unmitigated ranges. So this high to this low, don't take the tails. Let's measure this across our chart. Hello. To a tick. To a tick where price closed the day out. Okay, this is where you'd be looking to fulfill your terminus using mitigated ranges, premium discount, subordinate and parent price swings. You have everything. Okay, guys, trust me, you can go further down this rabbit hole. And if you want to do that, feel free to join the Red Pill server, which is my private Discord, where we have a mentorship where I trade live every single day and teach live every single day. But you have everything you need inside of this little 3-series episode on market structure to make money and become a successful trader. So guys, if you find value, please do consider smashing the like and subscribe. It does help the channel out and it helps other people view this content, which is cool. It's the only reason why I do it. But until next time, guys, trade safe, trade smart, and I'll see you on the next episode. If you have any questions, drop them in the comments. Abush!